What's good, everybody? Welcome to another basics bootcamp video, and today we're going to be going over time frames and why they actually matter. Now, to start us off, I'm not going to waste any time here. If you guys see on the top of my screen, you guys see my mouse cursor. You guys see on the top of my screen, we have 1M, 3M, 5M, 15M. All these represent is just minutes. So 1 minute, 3 minute, 5 minute, 15 minute, 30 minute, 1 hour, 4 hour, daily, weekly, and monthly. All right. So you guys might be asking, what does this mean on trading? What does this actually represent? What does this show for us, and why is it helpful? So I'm here to answer all your questions, right? So as you guys see, we have a chart, and then this chart currently is on the 15-minute time frame. Okay, what does that represent? That means that every single candle here, so this candle is 15 minutes, so this candle is 15 minutes, this candle is 15 minutes, every candle here represents 15 minutes of price action. So meaning, so at 15 minutes, let's just say this most recent candle, okay, we have this candle which opened down here and has moved very slightly up. Okay, obviously from the candlestick video you guys see that, right? It came down here and then it came all the way up there, but currently where price at is this blue line here. Okay, that's helpful to know because every 15 minute represents a different candlestick. Now if you guys were to go on different time frames, you guys might notice that obviously there are 3 5-minute candles in one 15-minute candle. How does that make sense? Obviously 15 divided by 5 is 3, meaning so every 3 5-minute candles there's a 1 15-minute candle. Okay, so time frames are really good if we want to actually determine where price is going, and that's literally the whole point of day trading, is getting a trade right, winning off of it, and time frames are really helpful to us. Okay, so I want to start off by saying the higher time frames, meaning the weekly, the daily, the 4 hour, the 1 hour, they are higher time frames, meaning they represent more time in each time frame. Okay, that more time is important to us because more time equals more power. Okay, if there's more time given and we see that price is going up on the 1 hour, right, we're seeing that price went up, and now, so we see price went up and price went up and now it's coming back down. This is important to us. Okay, this is more important to us than the 5-minute where we see that price is not really doing anything. Okay, the reason it's important to us is because 1 hour shows that every 1 hour, right, there's a new candlestick which shows importance of the market, and it shows where the market truly wants to go. Whereas we could be moving down on the 5-minute, yet we could still be looking to move up on the 30-minute, on the 1 hour, on the higher time frames. And that's important because if you're going to be basing a daily bias, meaning if you want to be looking at where price wants to go, you got to start off with the higher time frames because the higher time frames set a narrative for the rest of the day. Okay, that's important. Cool. Other than that, okay, it's important to not take a trade, meaning if you're going to enter a trade risking money, putting money on the table, and pretty much bets where price is going to go, you can't only be on one time frame. This was a very, very rookie mistake for me. I would just be on the 1 minute time frame when I just first off started trading, and I would be like, okay, cool. So we have, right, a fair value gap here, which you guys will probably learn about. You guys will learn about later, and you're like, okay, so we're moving upwards, so I could just click buy. But when you scale out on like a chart like the 15-minute, we could be looking to move downwards, right? The 1 minute holds less power than the higher time frames, right? I just explained that. Okay, so we gotta keep that in mind. So when you're starting to look off of a trade, you can be like, cool, let's start on the 1 hour, let's start on the 4 hour, then let's move down to the 1 hour, then let's go to the 30, let's see what the 15-minute is doing. And then when you're really looking to execute, when you're trying to find a pinpoint entry, meaning you're trying to find when exactly to enter into the markets, enter a trade, you're going to be looking at the lower time frame. So the 5-minute, 3-minute, the 1 minute, 2 minute, whatever. Okay, that's important because a 1 minute confluence, meaning if we have a reason to enter a trade on the 1 minute, it's not as important as a reason to enter the trade on a 15-minute. Okay, so I know I've emphasized that a lot, and it's been 5 minutes into the video, and I've probably said it 10 times already, but it's important. Okay, that's literally the most important point of all. Okay, when you're trading, okay, you got to make sure that every time frame aligns. Reason I say that is because if, let's say, for some reason your bias, meaning where you think price is going to go on the 1 hour, you think price is going to move up. Okay, cool. On the 30-minute, you think price is going to go up. Okay, on the 15-minute, you think price is going to go down. On the 5-minute, 3-minute, 1 minute, price is going to go down. You don't really want to see that because that just creates uncertainty. And when you're entering a trade, you want to have certainty to enter a trade, because if you're going to be risking money, you're obviously going to want to have the least amount of risk possible. So that means when you're making a reasoning, meaning you're making a daily bias, you want to look at all time frames, right? So I like to start off with the daily, okay? You guys will hear a lot more about this in the daily bias video, but you'll see, okay, right? Daily, we're moving up. So for the daily, probably going to move up. Then we're going to go to the 4 hour, okay? Let's say we want to move up on the 4 hour. Then we have the 1 hour. Then we're going to look up, okay? Let's say we're looking bullish, meaning we want to move up on every single time frame. That's obviously going to make me look for longs, okay? That's obviously going to make me look for buying power, meaning that prices you want to move up, okay? So let's say we have our execution, right? I'm not going to go too deep into the confluences because you guys will obviously get that, and you guys are obviously going to learn that a little later. But right, if we're on the 5 minute time frame, again, every single one of these candles represents 5 minutes. So we want to see clear, meaning bullish, so looking upwards displacement if I'm looking for buying power. Okay, that's important. Regardless, what else did I want to cover for this video, right? So that's pretty much it. Okay, we have every one of these is 5 minutes. So, right, again, every single candlestick here is 1 minute. Every single candlestick here is 3 minutes. If you guys want, right, you guys get the gist. Every single one is 5 minutes. Every single candle is 15 minutes. A candle is just this here, right? This right here, that's a candle, okay? If you guys want to add more time frames to the top of your chart, all you have to do is click this arrow button, and then you guys can favorite whichever ones you like, okay? That's pretty much it. Why time frames are important to us, okay? So now that we have time frames on the chart, we're gonna look at, I already made a video on time to trade, but we're gonna look at a video of what time frames to actually help us, okay? So we obviously have sessions, meaning that a session is where market fluctuates the most, meaning it moves the most, meaning the more volatility there is, so the more it moves, the higher the probability is to catch a winning trade, okay? That's important to us, so you guys are obviously gonna learn that in that video, but that's just a little preview because you're gonna be wanting to trade at a probable time for you to win, and you want to make sure that the charts are aligning, okay? Obviously, you guys are gonna see when you're learning confluences, when you're learning what a fair value gap is, when you're learning what a liquidity sweep is, when you're learning what SMT is, when you're learning what a change in state is, right? All of these things are helpful, but you have to use narrative, and this is where narrative comes in play. Narrative is pretty much saying that if we are, let's say, let me find my arrow thing. No. Okay. Narrative pretty much just says if we are going to be moving up, right? We want to see the 15 minute, right? So let's say the 15 minute, we go a little down and then we keep moving up. Obviously, we're in an uptrend. Why? Because we're moving up. Cool. Okay. Let's say on a 5 minute though, we see that we're moving like this. We sweep this high, and then we sweep this high, and then we see a very bearish reaction. What does that tell us? So the second example, this 5 minute example, doesn't mean as much as this one. Why? Because this is a higher time frame, meaning that this is obviously more helpful to us because the 15 minute holds more power than the 5 minute. Again, I already explained that, but if you need help, obviously go back to the start of the video. Cool. That's helpful. But again, like I said earlier, if you're going to be looking at, you want all time frames to align, meaning you want the daily time frame to be moving up. You want to see the 4 hour time frame, right, moving up. You want to see let's say the 1 hour is moving down, right? That's a problem. Why is that a problem? Because you want to see all time frames aligning, okay? Because if all time frames are aligning, that's obviously more chance of your trade going up. And if you're looking to buy, that's a good sign, okay? Narrative pretty much just means that you got to use context in your trades. You can't look at just 1 or 2 time frames. You got to be able to identify all the time frames. So how does that actually work, right? When you learn what fair value gaps are, like when you learn what actual confluences are, you want to mark them out on every single time frame. Meaning, if on the 5 minute, we create a bearish fair value gap, so a fair value gap to the downside, which is just this, I'm not going to explain it too much. But if on the 15 minute, we form a bullish, meaning an upward SMT from here to here, the bullish SMT is going to mean more because it's on a higher time frame. Also, if we're looking to move down, okay, and the same, like if we're looking bearish, meaning we're looking to move down on all of our time frames, and we have a 5 minute bearish fair value gap again, so same fair value gap, that's going to be more than the SMT because we're moving bearish, okay? context also means, right? Narrative also means that if we are going to make, like, let's say, okay, I'll give you guys a perfect example of this. Hold on. Let's say, okay, go on the 15-minute. Let me just find something. Okay. I gotta see a good example. I'm not seeing something. No. Okay. Cool. Let's say, all right. If we're, okay, here. Let's say. So this is a fair value gap, right? If we're gonna see this tap into it, meaning that we tap into this price range, and we see that price shoots straight down, this is going to indicate that price is disrespecting, meaning it's proving wrong. It doesn't want to move up, but yet wants to move down. Okay, how you find this is if we have confluences, meaning reasons to enter a trade to the upside, yet we are inversing them, we're not respecting them, and price is just continuing to move downwards. That's going to tell us where price actually wants to go. If we have momentum, meaning big candles, and we're moving to the downside, that's important because that's high momentum. That's a lot more sellers than buyers. Okay, and we obviously, the trend is our friend. We obviously want to be on the trend side. Okay, so a lot of times you see this with liquidity sweeps, meaning what a liquidity sweep is. Let's say we have a low, and then we don't sweep it, and then we sweep both lows, and then we see a very crazy strong reaction to the upside. Okay, this liquidity sweep is going to tell us a lot. Why? Not because we swept it. Yes, I guess this is orders being filled, but because then you just see a crazy reaction to the upside. This means that this liquidity sweep, this level, filled orders. Okay, that's important to us because if we're going to be seeing this strong of a reaction to the upside, we want to align all of our biases to look to the upside. Okay, again, that's getting into daily bias more, but I feel like it's something to go over, and you guys will obviously learn it eventually, right? So that's pretty much it. Right, covering how every single one of these candles, let's say it's 15 minutes, you don't want to trade only on one time frame. Okay, you want to be looking at every single time frame, and then you want to base your trades off of narrative. Okay, that's pretty much it. I'm not gonna hold you guys wait here too much longer. I don't want to waste your time that much. Pretty like decent sized video, 12 minutes. That's it. All right. So I hope you guys have a great rest of your day, and I will catch y'all later.